What's up, Mortgage Coach community? I am getting ready to have a conversation with one of my favorite leaders and one of the smartest guys who also happens to be pretty funny, Garth Graham. So what's up, Garth?
Hey, looks aren't everything. So by the way, I'm wearing this crazy t-shirt because I thought you said it was like a celebration. It's a mid-year halftime report. So I went with like New Year's Eve. Let's look back on what's happened over the first half of the year, make resolutions for the next half. And it's a Friday afternoon, at least when we're recording this. So, you know, and then the final piece is you've got all those thumbnails of all the people that you're talking to as you're putting this thing together, Dave. And I just wanted to be able to stick out. So there you go. No one else is going to have a tuxedo t-shirt on. So, you know, I'm happy to join you.
No doubt. Yeah, no one will do that. And no one else, I'm sure, will have the humor and the wit that you're going to bring to this party right now. So Garth, what I'm doing, and for anyone listening to this, is I had this thought about a week or two ago where, man, I've been doing this 40 years and I've never seen a market like this. Now, when I started thinking about all the shifts and all the markets, I'm like, you know what? Every time I'm in one of these, I'm like, I say the same thing. I've never seen a thing like this. But to me, the really unique thing about this market, usually when there's a shift and rates go up 2% in 2 months, it's like, we're screwed. And it's just like, how do we stay alive? You know, like yeah. But I've never seen a market where there's so much challenge, but also so much opportunity. You know, like there's some 100%. More equity in the market than ever before. There's more technology that can drive efficiencies. I mean, there's just like, again, no one's going to have a record-breaking year, but everybody could play this year strong and could have another record-breaking year next year if they play this year right. And so I wanted to interview people that I respect. You know, I've been doing this for 30 years, and you are one of the people that when I don't have an answer, but I want to, I call Garth or I text Garth. And so the theme is 2022 State of the Industry Halftime Report. And I'm going to ask you 3 questions and we'll see how you answer them. Before I do that, just in case there's a new loan officer that just got into business last month and they don't know who's this Garth Graham dude, give us a 1 minute for all the newbies to the industry.
Well, I've not quite been in the industry 40 years, but I've been in the industry 37. So I started in 1987. I started as a loan officer, by the way. So that is my DNA. I did start an online mortgage company called mortgage.com, 1996. We went public in 99, then suffered a big fat crash in 2000. So I have some PTSD over exactly this type of change. That company got sold to ABN AMRO. So if anybody ever brokered loans to InterFirst, I ran the MOI, Mortgages Online at InterFirst online e-commerce platform for them. Then that company subsequently got sold to Citigroup. So I've been through many of these cycles. I got the scars to show for it, and hopefully I'll give you some perspective too.
Yeah, and then also.
By the way, I now work at a Stratmor group, and we aggregate a lot of the data for the industry, including average profit per loan and cost per unit and things like that. So I'll throw some data at you too.
Yeah, and so for most people in the C-suite in the mortgage industry, they know Stratmor, they know Garth. Well, no, not most, all of them know them, and many of them are their clients. And for all you loan officers, this is who your C-suite goes for best practices. And when they want to get a new LOS, they hire Stratmor Group to, help them go through a process to do that. I don't think there's anyone that does more M&A work. So when you hear about companies that merged, Stratmor either helped them or Stratmor consulted within that process, very likely. So,
by the way, I do not wear the tuxedo t-shirt when I consult with the C-suite. So this is a special treat for your audience.
Oh, I bet you do. I don't believe that for a second. I've seen you on some stages at NBA and you would do this. All right. So I want to do this conversation in 3 chapters, and I want to, have 10 minutes to talk about the biggest opportunities for smart, modern, leading mortgage companies and lenders. So every time it's going to be lenders and loan officers. But before we do that closing chapter, I want to know data points. Like I've interviewed, I think you're the 15th person, just because you were harder to get on the call than 15 other people. You were probably my first ask, but I want to know what are some data points and some trends in the industry that
Yep.
one are hurting us and two create these opportunities.
Yeah, sure. So I'll run a few. First of all, we all know this one acutely. The refinance drop this year is going to be at least 60%, especially the no cash out refinance drop. That's what's driving the drop in the market. So last year was a $4 trillion market. It was one of the best markets in history. This year will be 2.5. That 1.5 trillion drop is painful. It's all refi, frankly. There's actually going to be more purchase this year. Now there's seasonality and there's some geography impact depending on where you are in the country. But it's going to be a good purchase market, most partially fueled by the fact that the average loan amount is so high because the average sales price is going up on real estate. But there'll be roughly the same number of refinance transactions this year as there were last year, about 6 million of them. So go get the 6 million. Those are the opportunities. 6 million households, families need help getting a home. And, establishing those relationships really is the opportunity. And that is a big number by historic standards. It's just coming off the biggest year ever because of the refinances. The second thing is there's a lot of noise. Yeah. Yeah.
I want to make sure every local originators, like that 6 million in the country, what is it in your market? Yeah. The more that you can take these national stats and you can localize these national stats, you're going to show up more intelligently and more inspirationally to a real estate agent. So if you don't know that, figure it out. Okay, keep going.
Well, no, but the other thing I would say, by the way, is there's about a million realtors. So there's a million realtors and there's 6 million transactions. So you need to know both of those for your local market too. How many are there of their local market? How many real estate transactions are there? You could set goals for yourself for this year. We'll break that down. How many of those do I need to know? How many sales goals do I need to make? How many total cost advisory, total cost of ownership do I need to push out? How many presentations do I need to do? You need to break it down and be really methodical in cranking that out. And I know you and your, whether it's your Facebook group or your YouTube videos, you talk a lot about that. Break it into the bite-sized chunks.
Absolutely.
So we just went right to opportunity.
You did. By the way, everybody does it. Everybody does it. So don't worry about it. If you go too crazy on getting ahead, I'll stop you. But more data points. Give me 2 more data points that are really important.
So a couple more data points. Over 50% of all refinance transactions last year were done by consumer direct. Over 50. 15% of purchase transactions were done by consumer direct. The brunt of the pain is going to be in CD. Not all of it, because certainly the average loan officer out there probably did 4 purchases a month and 4 refis last year per month and had a great year. And the 4 refis are gone. So now they're going to be hopefully 4 purchases and 1 refi or a half a refi even per month. But most of it will be in CD. And granted, the CD people will pivot into the purchase market with a vengeance, and they're going to create some disruption, but they're not going to start with a lot of skill. And they're not going to start with a lot of natural ability or muscle memory on how to do a purchase. So if you are a local realtor, local loan officer, play to your strength, which is your knowledge about local market conditions and your knowledge of realtors and your ability to do purchase loans. So as bad as that 50, 60% drop's going to feel, it's going to be felt much more acutely with the consumer direct lenders.
One more data point.
One more, there'll be 40 M&A deals. And I say that, so that's 40. That is the biggest year since 2018 when there were 33. It's not 400. And I'm in M&A. It's 3 to 4 a month. The noise is as if there's 10 to 20 a month, and there's just not that many. I bring that up only because and it's in the opportunity, you need to filter out the noise from the reality. And they'll certainly, I'm in M&A, so I hope there's 400, in some ways. But it's not, every company is not for sale, and not every company is going to be for sale. It's really still going to be probably, 40, which is a very big market, but not as big as I think what a lot of people think about.
Yeah, no, it's true. I have talked to people. Now, all the people I've interviewed are some of the most elite, informed people, and they're all very practical about the struggle, the challenge and the opportunity, but I've talked to people that aren't, and they're like, sky is falling. No, it's the third best year in the history of the mortgage industry. And
Yes,
to your
that's
point,
right.
yeah, M&A is up and there is some consolidation, but it's still just incrementally up. And so the data, anyone listen to this, guys, this is an awesome market to get market share if you do the right thing. So what are some trends that are happening that you think create some opportunities for people that want to game it up
Well,
and kill it?
yeah. So we're certainly under pressure on profitability. And there's really two elements of that. One is margin compression, i.e. lenders having to get much sharper on price in a down market. And the second is the fixed expenses of the business being spread across less units. The average mortgage company's got about 50 basis points in corporate back office expense last year. In other words, all the stuff that the loan officers don't see. So it's the tech, frankly, the QA, QC, CFO, compliance, risk, all that. Well, this year it's already gone up to 100 basis points. And it's not they're spending more money, they just got less volume to spread it across. So it is an opportunity for lenders to cut, but there's only so much you can cut out of corporate back office. Yeah, you have to keep your risk people, and you got to keep your compliance, and you have to keep your tech. So at some point, an opportunity is how to properly cut the expense base in order to compete, or learn how to consistently be able to sell against price, because there's going to be significantly more price objections, and you need to be super sharp on how to do it. High quality presentations being a good example.
Thank you
David,
for that plug for the total cost analysis. Anyone listening, mortgage coach loan officers are at least 10 basis points more profitable than fee worksheet loan officers. We've got lots of studies on that. So let's just get right into opportunities. What do you think are the biggest opportunities to gain market share and differentiate this market for a lender and loan officer?
You need to be very, very good at the pre-approval top of funnel. I always say this, and I've written articles about it. You're welcome to share them, Dave, if you like. But it's like a refinance is a linear transaction. Here's what I have now. Here's what you have now. Here's what I can offer you. Do you want it or not? I mean, it's almost that simple. And a purchase is very episodic. What are you looking to accomplish? Here's the type of affordability and how much home you probably can afford. Oh, you haven't been able to find a home in that price range. Let's talk about some other options. And then, oh, by the way, let's involve your wife. Oop, there's a realtor involved. And what did your cousin tell you? I mean, it's around and around and around. And that's before the impact of the fact that these pre-approved homeowners, borrowers, prospects are going to stay in the market 6 to 9 months. So you're going to have to be patient, and you're going to have to work with them for months in order to get pull through. It is not the instant gratification that you have in a refined market. So the opportunity is to get really good at that, to partner with the realtors who also need to get really good at that. And in some ways, the average realtor does 6 deals a year. High producers are much higher. But don't for a second think they know more about your business than you do. So you are the expert, and you should have empathy for how critical these transactions are to them. They only do about 6 a year. So partner with them, understand how painful this is for them at top of funnel, and consistently reinforce how you are able to help them and the homeowners as they go through the cycle.
So
I think that's one.
For the next few, I want to share an idea, get your opinion, and then you share an idea.
Sure.
So I feel like the industry overly obsesses over, volume, like I don't know a single lender where they don't have a leaderboard that goes out every month with who's the loan officer that closed the most in loan volume and who's the unit leader. But when I ask them what conversion is, they don't that's a project. Like, let's go find out who's got the best conversion. That's hard to do. Who's the most profitable? I do know lenders where, they got a great BI engine and, they can look at it per branch, per loan officer, but they're not scorecarding it. And I have this case to be made that if lenders started, celebrating who's got the best conversion, It's celebrating who's got the best, profitability. It's celebrating who has the best customer stat scores. Like if they like put the same energy and awareness around that as they did around who closed the most loans and who did this, that production would go up and units would go up and best practices around conversion and profitability would get focused on more. What are your thoughts on that?
I 100% agree. I think it, by the way, should start too. Lenders should talk about how many families they help, not how many volume they do. We all get paid on volume. I get it. I speak in basis points, as my primary language, but it's really about the 6 million people, homeowners that need, or home purchasers that need help this year. And those 6 million, how many of those 6 million are in my local market and how many can I help? And if you just sort of orient yourself around trying to help them and not worry whether it's a big or a small loan, that stuff already kind of evens out in the long run. I think that is it's a big cultural sort of foundation that companies can do, and some of the better ones do it. But I agree with you. I mean, and I fell into the trap, and the first thing I said was the market's gone from 4 trillion to 2.5.
No, but
we should have been saying it's gone from 12 million to 6.
But it's okay. I mean, it is a benchmark. And then here's another idea. Tell me what you think about this. Is if one, you did this, and so you knew who the top 3 conversion loan officers were, you knew who the top 3 profit. By the way, I guarantee that those are also among the top customer satisfaction loan officers. Like that's the way it's gonna work out. And then you did just, instead of just doing sales meetings about anything and everything, you did, if you were a branch manager or regional, you did a weekly 30-minute sales meeting where your best conversion and your best profitable loan officers were teaching, this is how I get such conversion. This is how I get less rate shop less and have less price exceptions. And they were just like, in the market like today, the biggest cost are the loans you lose. You lose because, your best loan officers have a great conversation. Your worst loan officers don't. And if they just trained on that and they focused on those best practices, like they'd kill it.
Well, so one thing I would also say, if you are helping someone in a purchase, the most important question to understand the answer to from the consumer's perspective, you need to understand why. And what I mean is, why are they buying a home? There are goals, there's aspirations, there's things they're trying to accomplish. If you weren't in the mortgage business and someone said, hey, I'm actually out looking for a home, your human reaction would be, wow, that's exciting. Why? And for some reason, we get in the mortgage business and we start to immediately shift into transaction mode, and we start saying things, oh, what sort of sales price are you looking for? How much are you able to put down? Have you considered an option, for an adjustable rate mortgage, that'll lower your monthly payments? I mean, you get right into transaction mode. It's like, ask why. And the why is like, bigger home for an expanding family, smaller home because I'm getting a divorce, getting closer to work, being able to work remote. I want a better school system. I mean, there's all sorts of things. That's what the realtors naturally also have to connect on. So don't forget why is probably the most important question, which means slow down and ask why, and you'll likely have higher conversion because you are connecting emotionally regarding the transaction or regarding their goals and aspirations rather than just being.
I love it when I get sales leadership from Garth. It's always spot on. So here's another question I have, and I want to see if you agree. And then 2, why is it like this? Like most lenders, they're always chasing new relationships, new customers, and I think they spend, 5-to-1 money and time on new versus their own database, and like this is what most realtors databases looks like, and this is what most lenders database looks like, and this is what Rocket and Zillow's database looks like. Like they know who is most likely to move up, who's shopping for a mortgage, who's looking for a home, who just listed, how much equity people have, credit data, like, what range is their FICO score or their score. And I think it's less than 10% of the industry doesn't have this kind of intelligence. Now, again, Mr. Mortgage Coach, and now I'm also Mr.
Mhm.
Sales Boomerang. But, like the industry could, like loan officers have it. Anybody that's a Mortgage Coach and Sales Boomerang client, not only do they have this data, but they can put a digital presentation in front of that family at the right time. So my question to you is, why does the industry, why aren't they putting more money into their database and making sure, and it's not just money, it's time. Why do you think they're
Yeah.
not doing that?
Well, so I'd answer this a couple different ways. My headset just crapped out, so now I'm on speakerphone.
I can still hear you
You can
pretty
hear
good.
me?
Yeah,
Okay, okay.
it's great.
So
You
I
don't
got a
sound
couple
as
ones.
like radio Garth, but you sound good.
How's that?
Oh yeah. That's
So there we go. I would, one is we are coming out of a capacity market to a scarcity market. So capacity last year was, how do I handle the last 2 years, the sheer amount of volume opportunities I already have. So they lost sight of the ball in this market, which is, how do I go find more opportunities? So we're in that shift from capacity to scarcity, and companies need to focus on things like this, just as your slide described. The second thing, and I would say this is the personal challenge for loan officers, many loan officers are not very good updating their database with exactly what the customer tells them.
right.
And what I mean, one is the why. Like if you don't ask why, they're not going to tell you why. But the second is they'll listen to the conversation, and maybe they're in their CRM and they're half distracted, and they don't take notes, or they don't mark down, what's really happening. So then they've missed, a local loan officer establishing a connection with a consumer ought to have the best database, because if you ask them, they'll tell you, and you'll have information about their goals and aspirations that the Zillows of the world and the banks of the world have no chance to compete because they haven't talked to the customer. So don't play to your strengths. Partially means embracing the technology you have and being sure to constantly keep it updated.
I like that. And you're right. So, and that's one of the reasons why we're kind of killing it is, we're bringing data, and I'll let anybody that wants to watch this, take a screenshot. These are the alerts that the most elite lenders have. They've got data science teams, and at Mortgage Coach, it's one of the reasons why we love Boomerang is that it, we can put a digital presentation in front of, like, oh, this consumer's over 50 and they've lived in their house for a long time and they have a crazy amount of equity, and let's give them a move down analysis, and oh, this is a first-time home buyer who's a millennial, but oh, they've got 40% equity. Let's give them a move up. Like, let's nudge them. Like, hey, did you know you could move up? And this is what your payment would be. Guys, there's some move up millennial home buyers that could move up, get a bigger bedroom because they have equity. They could buy that home. They could sell their old home. They could take the cash, pay it to the equity, recast the mortgage, and they could get the better lifestyle and actually have the same payment or a less payment. They don't know that. So Garth, I want to be respectful of your time. Any last opportunities before we wrap up this interview for this awesome article I'm writing with Kristen?
I do think that so I rattled off my bio, and I have done a number of things in my career, but I also want to say this. I worked for Chase for 9 years, and there were better companies than Chase when I worked there, but I didn't jump for small stuff. And when I started my company, I stuck with it for the 6 years until we sold it. And then I stuck at ABN AMRO for 7 years until that was sold. I point this out only, there is so much noise and recruiting going on. And for some people on this phone, maybe, switching jobs is the companies is the right thing. I'm not saying it's the wrong thing, but switch for big things. And the big things ought to be the ability to better help families buy real estate, the ability to penetrate the 6 million people, of which some of them are local in your market. I'm just hearing too much around people jumping. And when I was a loan officer, sure, I could have made a few more basis points and gotten a guaranteed draw by switching to, the hottest savings and loan down the street that had some portfolio product. But I generally found you know, a little bit of the slow and steady wins the race. And I'm only making changes like that if it's meaningful in my life, not just for the thing that might look a little better on the other side of the, you know, grass is always greener model.
Amen to that. So 2 quotes to close this out, guys, is don't let a crisis, don't let a crisis like this go to waste, and don't get bitter, get better. So there is the tech stack out there that you could implement, sales boomerang, mortgage coach, HomeBot. There's all kind. I mean, there's never been better tech. Like, this could be the best decade for local professionals and local lenders that help professionals. But you do need to have the right tech stack, and then you need to use it. To his point earlier, loan officers, if you are not, every loan you're closing right now could be, by the end of the year, rates might be in the 4s. That might be refi number 1. By middle of next year, they might be in the 3s. Like, if you database your loans, if you have borrower intelligence, if you've got good systems, like, next year could be amazing. And by the way, I'm not an interest rate predictor, although I listen to people that I trust and respect, and it makes sense that we could easily bounce back into the 4s and 3s sometime by the end of this year, next year. But whatever it is, use your database. Don't get bitter, get better. Garth, you the man, bro. If anybody got value from this, give it a like, share it with your mortgage friends, and stay tuned. By June 15th, I will have this really awesome best practice document in the market, and we'll have some Stratmor stats. And thank you, Garth.